Did you know that some stocks not only reward you with growth, but also pay you to own them? In today's deep dive, we're exploring the elite circle of 10 dividend stocks that are not just investments, but treasures you buy once and hold forever. From the tech behemoths revolutionizing our digital world to the everyday brands making our lives easier and tastier, we're uncovering the secrets to building wealth through dividend investing. So, what makes these stocks truly stand out for dividend investors looking to build wealth? Well, let's see. 1. Microsoft. Founded in 1975, Microsoft has transcended its initial focus on operating systems and office software. Today, it dominates various sectors, including cloud computing, Azure, gaming, Xbox, and personal computing, Surface devices. When you look into one of their most recent annual reports, fiscal year 2022 ending June 30th, 2022, they boast record results. It has a revenue of $198 billion, demonstrating Microsoft's continued influence across technology domains. More of the profits came from the Microsoft Cloud, which surpassed $100 billion in annual revenue for the first time, underlining the success of Azure and the increasing shift towards cloud solutions. The company has so far maintained high profit margins, showcasing operational efficiency and strategic pricing models. Their financial robustness is mirrored in its stock performance. The company's commitment to shareholder values is evident through its consistent dividend payouts, which have seen a steady increase over the years, reinforcing the confidence investors place in Microsoft. As of the reporting period, the share price adjusted close was marked at $177, encapsulating the steady growth trajectory of Microsoft's stock value. This appreciation in stock price, coupled with a strategic approach to dividends, makes Microsoft a compelling option for investors looking for stable growth and reliable income. 2. McDonald's. Recognized worldwide for its golden arches and symbol of convenient meals, McDonald's boasts a sprawling network exceeding 40,000 locations across over 100 countries. This vast presence cements its status as the world's leading fast food chain, serving millions daily. Their commitment to enhancing shareholder value is evident through its consistent dividend growth, a vital measure of their financial well-being and operational success. With a market capitalization of approximately $201.18 billion and an enterprise value of $249.69 billion, McDonald's maintains a strong position in the equity market. The company's stock performance, illustrated by an adjusted close share price of $297.75, reflects investor confidence in McDonald's strategic direction and long-term growth prospects. When you dive into their reported dividends per basic common share at $1.67, it surely highlights its capability to generate and distribute wealth to its shareholders, with a trailing yield of approximately 2.2% and a 5-year average dividend yield of 2.23%. This underscores McDonald's financial strength and its commitment to rewarding shareholders through dividends. 3. Visa. Visa Incorporated remains a dominant force in the digital payment realm, facilitating transactions worldwide. Consumers, merchants, financial institutions, and governments rely on Visa's ubiquitous network, VisaNet, to process transactions across the globe. This network boasts handling over 65,000 transactions messages per second, underlying Visa's crucial role in the global financial system, enabling digital payments in more than 200 countries and territories. The company functions as a transaction processor rather than a card issuer, allowing for a scalable and capital-efficient operation. The company's recent results for the fiscal year ending September 30th, 2023, indicate solid financial performance. The company reported net revenues of $32.7 billion, reflecting an 11% increase over the previous year. Moreover, Visa's GAAP net income for the entire year was $17.3 billion, showing a growth of 15% compared to the previous year. The company's earnings per share also demonstrated positive growth, with a GAAP EPS reaching $8.28, an increase of 18% over the prior year. Visa's financial success was supported by stable payment volume growth, cross-border solid volume growth, and consistent performance in its value-added service businesses. Furthermore, Visa's board of directors increased the quarterly cash dividend by 16% to $0.520 per share and authorized a new $25.0 billion multi-year share repurchase program. 4. United Health. This one remains a healthcare powerhouse, offering a comprehensive suite of services that encompass insurance, healthcare benefits, and advanced technology solutions. This diverse portfolio allows them to cater to a broad range of healthcare needs, striving to improve health outcomes while controlling costs and enhancing the patient experience. United Health Group's recent results for the fiscal year ending December 31st, 2023 demonstrate strong financial performance. The company reported revenues of $371.6 billion, marking a 15% year-over-year growth. Earnings from operations grew by 14%, reaching $32.4 billion for the entire year. Additionally, the company's net earnings were $23.86 per share for the entire year and $5.83 per share for the fourth quarter. Adjusted net earnings were $25.12 per share for the entire year and $6.16 per share for the fourth quarter. These results reflected broad-based growth at Optum and United Healthcare, showcasing the company's commitment to improving patient care and consumer experience while delivering strong and balanced growth. United Health Group affirmed its 2024 performance objectives and adjusted earnings outlook, excluding potential impacts from the pending sales of its Brazil operations. 5. Costco. Founded in 1976 and operating its first warehouse in Seattle in 1983, Costco has grown to become the third largest retailer in the world, operating hundreds of warehouses across the globe. The company differentiates itself with a membership model, which generates a consistent revenue stream from annual membership fees in addition to sales revenue. This model emphasizes high-volume sales of a limited selection of products at low prices, leveraging economies of scale to pass savings to its members. Costco Wholesale Corporation's latest annual report for the fiscal year ending September 3, 2023, reveal a solid financial performance. The company reported net sales of $237.71 billion for the 53-week fiscal year, representing a 6.7% increase from the previous year. Net income for the fiscal year was $6.292 billion, translating to $14.16 per diluted share, compared to $5.844 billion and $13.14 per diluted share in the previous year. Costco's comparable sales across different regions shows varying growth rates, with the US at 3.3%, Canada at 1.7%, and other international markets at 2.8% for the 53 weeks. 6. Starbucks. Starbucks Corporation remains a titan in the global coffee industry, a premier roaster, marketer, and retailer of specialty coffees with a ubiquitous presence. Starbucks' fiscal performance in 2023 shows strong results for its fourth quarter and full fiscal year. In the fourth quarter, Starbucks achieved record net revenues of $9.4 billion, with comparable store sales up globally by 8% in North America and 5% internationally. The company's GAAP EPS was $1.06, driven by global solid performance and execution of its reinvention plan. Moreover, Starbucks' active U.S. Starbucks Rewards membership reached 32.6 million, showing a 14% increase over the prior year. The company's financial targets for fiscal year 2024 focus on a balance of revenue growth and margin expansion, building on the momentum of its reinvention plan. Currently, their annual dividend yield sits at around 2.55% for the better part of 2024. 7. Home Depot. This is the largest home improvement retailer in the United States, known for offering a wide assortment of tools, construction products, appliances, and services. Home Depot caters to both do-it-yourself customers and professional contractors with its vast inventory of high-quality products. Home Depot's most recent annual report for the fiscal year ending January 2024 indicates a challenging year for the company. Despite topping Wall Street expectations for the fourth quarter, Home Depot experienced a decline in sales, with fourth quarter sales amounting to $34.79 billion, down from $35.83 billion in the prior year period. The company's same-store sales, a key indicator of retail health, fell by 3.5%, with a 4% decline in the U.S. market. Home Depot's CEO, Todd Decker, described 2023 as a year of moderation following several years of exceptional growth. The impact of high mortgage rates and inflation on customers contributed to the decline in sales, reflecting the challenges faced by the largest home improvement retailer in the country. Despite the sales decline, Home Depot remains optimistic about its fiscal 2024 outlook, predicting sales growth of about 1% for the year, including the 53rd week. But why invest in Home Depot? Well, additionally, the company announced a 7.7% increase in its quarterly dividend to $2.25 per share, demonstrating its commitment to returning value to shareholders amidst the challenging market conditions. 8. Automatic data processing. This one is a global leader in providing human resources management software and services, with particular renown for its payroll processing services. ADP's suite of services is designed to help employers manage their workforce more efficiently, comply with regulatory and tax requirements, and improve employee production and satisfaction. The company's extensive use of data analytics and machine learning enhances its offerings, providing businesses with insight into their operations and workforce dynamics. Automatic Data Processing's most recent annual reports for fiscal year ending December 2023 highlights several key financial results. In fiscal 2023, ADP reported a 9% increase in revenues to $18.0 billion for the year, with a 10% organic constant currency growth. The company's employer service new business bookings also saw a significant increase of 10% to $1.9 billion for the year. Adjusted EBIT grew by 15% to $4.5 billion for the year, with the adjusted EBIT margin increasing by 130 basis points to 24.8%. These financial results reflected a strong performance for ADP in fiscal 2023, demonstrating growth and profitability across various vital metrics. 9. Apple. Apple Incorporated stands as a colossus in the technology sector, renowned for its innovation in consumer electronics, software, and online services. From the revolutionary iPhone to the intuitive iPad and the sleek MacBook, Apple's product portfolio has consistently set the benchmark for design, functionality, and user experience. Moreover, Apple's software ecosystem, including iOS, macOS, and the App Store, alongside services like Apple Music, iCloud, and Apple Pay, have further cemented its place as a leader in the digital age. Apple's most recent quarterly earnings press release for the quarter ending December 30th 2023, and annual report for the fiscal year ending September 2023 highlight key financial results. In the fourth quarter of fiscal 2023, Apple reported quarterly revenues of $89.5 billion, down 1% yearly, with quarterly earnings per diluted share of $1.46, up 13% year over year. The company achieved a September quarter revenue record for iPhone and the all-time revenue record in services. Their financial statements also show operating solid cash flow, significant returns to shareholders, and ongoing investments in long-term growth plans. 10. J.P. Morgan Chase & Company. With a history dating back to 1799, J.P. Morgan Chase has become a key player in the financial industry, symbolizing trust, reliability, and innovation. The firm operates in over 100 countries, employing a strategy that combines global reach with expertise in local markets. Its commitment to technology and innovation has positioned it as a leader in financial services, continually adapting to the changing landscape of the global economy. J.P. Morgan Chase is one of the world's largest banks and financial services companies, with roughly $3.8 trillion in assets. A string of bank failures in early 2023 weighed on the financial sector, but J.P. Morgan took advantage and acquired failed First Republic Bank after it was seized by the Federal Deposit Insurance Corp. Analyst Stephen Bigger, current director of product strategy at Argus Research, says J.P. Morgan has reported impressive net interest income growth. He says loss provisions have peaked and investment banking revenues should rebound in coming quarters. Argus has a buy rating and $204 price target for JPM stock, which closed at $187.87 on March 7th. Its yield is at 2.2%. So now, which among them will you look into the most? Comment down below. Let's engage. In the meantime, leave a like, subscribe, and turn on the notification bell for more amazing investing videos.